Now that we looked at the reasons why you should consider buying stocks, now let's take a look at the reasons why you should not buy stocks. The first is that stocks can be risky over short periods of time. This is the S&P 500 index, some historically bad one-year returns or a couple-year returns. Here from the tech bubble back in 2002, the S&P 500 declined by 49%. A lot of technology stocks did a lot worse during this time period. So if you look at the NASDAQ 100 index, which is mostly technology stocks, that actually decreased by over 80% in the same time period. The market also dropped by 55% from 2007 to 2009 during the Great Financial Crisis. And then in 2020, with COVID-19 hitting, shutting down the entire economy, the S&P 500 dropped by 33% in a matter of about a month, maybe a couple months. And then the worst market ever, stocks actually declined by 85% during the couple-year period from the end of the Roaring '20s to the depths of the Great Depression. So if your time horizon is short, you should not be investing in stocks. It is very possible that whatever you have now could be divided in two over a short time horizon. The second reason why you should consider avoiding stocks is that stocks can be ripe for stupidity. And what I mean by this is a lot of people get into stocks, they try to get better returns than average, and in pursuit of those strategies, they end up finding penny stocks or doing market timing or a litany of other just bad strategies. They also, a lot of times you can borrow to invest money. You can do this with margin in an account that allows you to, take out, $10,000 for a $2,000 investment and put that entire $10,000 to work. Then it only takes a 20% decline to basically wipe your entire equity to zero. And then this can also happen with leveraged ETFs. Lots of bad ideas surrounding leverage. And then finally, just arrogance. It is difficult to do better than the average investor. There's a lot of smart people that are trying to make good buy and sell decisions on individual stocks. So to come in and think that you're just going to pick this up in a month or two and earn better than average returns is a bit arrogant. I'm not saying it can't happen, but you need to have a lot of humility in this industry. If you're going to try to pick stocks, you're probably going to mess up quite a bit at least at the beginning. It's very, very rare that you will have better returns than just an average index fund. If you do, it takes a tremendous amount of skill to do so. 90% of mutual funds fail to do it. So if you think you can do it, that's a little arrogant. I'm not saying you can't, but just be humble coming into this. It's very difficult to do.